So starting off this panel, there's obviously quite a lot to be discussing. We have a great lineup, and this will be covering RegTech and frictionless payments and the introduction of PSD2. So we were having a bit of a discussion before the event on what sectors we would sort of go into in more depth. And I thought that to start, instead of asking the experts to give their opinion on what the actual issues were, I thought I'd give a summary for the most normal people. So let's start with PSD2, which is going to be the introduction of fintech disruptors. So what does that actually mean? So it means that banks are no longer competing against other banks, but also offering financial services. So I actually read in a newsletter this morning called Finimize, which actually was talking about the Amazon discussions with JP Morgan and how they might be creating a partnership. And actually what we realize is that this is the new rollout of open banking. So this isn't just good news for people that are trying to sell you things, it's also good because it's going to force the banks to share your financial data with firms who can help suggest ways for you to save money. In contrast, we've seen the introduction of GDPR, which is coming to effect this year, which is the EU's way of giving individual prospects, customers, contractors, and employers more power over their data and less power to the organizations that collect and use data for monetary gain. So these two, PSD2, alongside GDPR, seem like a contradiction. How would you say that this is disrupting and affecting the market? And we will start this side with Dorel.
Hi, good morning, everybody. So my name is Dorel Blitz. I'm the head of the Fintech at KPMG in Israel. And I don't want to go into those kind of alphabet soup, those kind of buzzwords, whatever, because no one really gets that. But I think what's really important just to understand this kind of trend. So what you just said, which is really mind-blowing, is that JP Morgan Chase, which is the largest bank in the US, a very conservative bank. I'm working with this bank, so I know. And they just announced that they are working right now with Amazon on launching some kind of a current account עובר ושב, חשבון ראש, מה שנקרא, current account to their customers. It means that I can be, in the next future, in the near future, I can be an Amazon client, an Amazon customer. I will be able to get all sorts of loans from Amazon. Amazon already doing it today with their small business customers, but they can do it also with the retail customers. And I will be able to save my money or to just to have my money in some kind of an account like PayPal is already have this day. And I think that by collaborating with JP Morgan Chase or some other banks, I'm sure that will go into this kind of cycle, it means that we are finally seeing some big banks really understand what is open banking all about, and that there is no other way but just collaborating with those kind of other companies coming from other places. So I think banks for like 500 years came from, just guarding customers' information, customers' data, and just help them to save their money or invest their money or just keep their money. And I think that finally we are seeing coming from regulators or internal or from their customers or from technological trends, whatever, we are finally seeing banks becoming a platform. And I know it's a big buzzword, platform as a service, but we are finally seeing that. I just got back from Singapore a couple of months ago and I saw banks already playing with Alibaba or Tencent or some big ones going into e-commerce, collaborate with telco companies, collaborate with retailers and so on and so forth. And I think in the end of the day, it's not really the regulations, it's all about what kind of value banks can provide their customers in a much more holistic, broader view. And I think this is what we are going to see in the next couple of years. Some of that is getting pushed by the regulators, some of that will come internally. Banks finally open their infrastructure, becoming much more open, flexible, nimble, and agile, and trying to find new business model specifically around their data, which is the most important thing, and how they can provide this kind of much bigger value to their customers.
Let's go to Oded, who, if I'm right, has recently left Visa and has actually started his own startup called Fintivity. So I think this also really gives you a really amazing understanding of both the corporate side and then more of the startup world and the disruption. So that would be fascinating to hear your point of view on this.
Thanks. I completely agree with Dorel. I just want to add a few words. I think PSD2, everybody panicked about for a long time as something that will force the banks to allow fintechs to compete with them. But in fact, it's the opposite. It's enabling banks and fintechs to better collaborate with each other and grow the market. And I think the JP Morgan, Amazon example that was just announced, I think it was yesterday, is a very good example of that. JP Morgan knows that 25% of Americans are unbanked or underbanked, and they have no chance of getting their business. Amazon wants to sell to these people, and they have no way of accepting their money. So this partnership will enable that to happen, and in the same announcement, or some versions of it, also talked about collaborations with other companies that will enable Amazon to access unbanked people who right now can only pay with cash but want to use Amazon to make purchases. So what's happening in Europe? In Europe, the regulator kind of looked at the financial industry and said, you know what, there isn't enough innovation here. If we look at telecom, there's lots happening. If we look at internet and ads, there's lots happening. Look at kind of what Facebook's doing. A lot of the experiences you get on Facebook are not delivered by Facebook. They're delivered by startups that have delivered plugins, worked with Facebook's APIs. And why aren't we seeing this happening in banking? So the idea was, let's create some kind of standard that all the banks will provide APIs to third parties, allow small startups, large tech companies, even Facebook and Google, to use the bank platforms to enable customers to make payments. So if I'm communicating with Darrell on Facebook Messenger, why can't I just send him a payment using my bank account? Why do I have to use these old traditional methods that were very innovative 20 years ago but aren't innovative anymore? So I think the idea of fintechs collaborating with banks was revolutionary, I don't know, 5 years ago?
Yeah.
Now everybody says it, but it's actually beginning to happen. And we see, I don't know if you all know, but this new regulation in Europe came into effect in January. So this is extremely fresh. And now there's a competition among the banks. They said, okay, we're forced to do this. You're dragging us through the mud. That was the perception, a couple of years ago. But now what some banks are saying, well, we're forced to publish some of our APIs. We're forced to give third parties access to our customer data and to enable them to make payments. What can we do to differentiate ourselves and make us better? So if you look at Nordea Bank in the Nordics, which is one of the top 10 banks in Europe, they said, we're going to give access to more data than the regulation requires us. Why? Why would I do that? Why would I give even more access to my proprietary data? Well, you know why? Because that's going to enable startups and tech companies to do more and to deliver even more value, not only to Nordea customers, but to customers of other banks. And that might enable us to convert customers from other banks to us. And now what you see is that the banks are beginning to think like startups. We're going to use this digital space not only to protect our current client base and to grow naturally, but to grow incrementally by converting customers from other channels. So this regulation will take time. It's not like the world collapsed in January. Not that much has changed. But I think if we go forward 5 to 10 years from now, it will be a very different space that will have changed in very similar ways to the ways that telecom changed.
Okay, let's add in Ophir on this, and then we'll move on to the next thing.
Hi, everybody. My name is Ophir Golombek. I work in Accenture. I'm leading the financial services practice here in Israel. And actually, I agree with Dorel and with Oded. I think in Accenture, we see open banking is something big, something that all of the banks and some other players should pay good attention. What happened in the UK, it's very, very interesting. 2 years ago, they're working on their own regulation on the PSD2, and what we saw that almost all the bank in the same day initiate the account aggregation the platforms. So now if you are a customer of Barclays and HSBC or some other Lloyds or some others, and if you are multi-bank customers, you can get access to all your bank accounts with one app. So first, the bank will start to compete with each other, and this is very, very interesting. Second, it's a role of fintechs. So I think for many years, I think the world of open banking, why it's open banking? Because banking is a very, very closed economy. Okay, it's a closed garden. For many years, they're controlling all the value chain from managing their own books, manufacturing products, distributing and marketing their products. So that was very, very close. Now, open banks actually force them to open themselves to the ecosystem. So from what we see in Accenture, we have some couple of examples where fintechs play an interesting role. First of all, it's the harder part of the FBS2, it's the payments. So we see a lot of fintechs in the area of payment initiation. So like forgot the names, I'm very, very bad in names, but we see a lot of companies there. Second, it's about the account aggregation. So a lot of players providing account aggregation services on top of their banks, and this is another area. We also see a lot of movement in the area of switching products, okay, and some other non-financial services, like some big players in the UK that offer you to switch utility products, utility services, communication services, and also help you to switch products. Of course, we're talking about fintechs that are playing in the compare thing, okay, help you to find the next product. And one of the nicer example, it's a real estate agency in the United States that actually help you to find your house that you want, and after help you to initiate a mortgage. And last but not least, I think it's the area of the data aggregation, and also the ocean and the area of data monetization that for many years, you know, the most valuable asset of the bank was the data of the customer. And now, actually, if the client wants, he can share the data with some other partners. So I think we're going to see in the future a lot of attention in there of data monetization. Now, what you said about banks, I totally agree with you. We had some interesting survey in Accenture, and we find out that, first of all, 22% of the executive of the banks already done the investment in 2017, but most important, and I think interesting, that 70% of the banks are going to do the major investment in APIs, in open banking in the year of 2018, and this is something very interesting. Second thing that we ask, what do you think about open banking? So around more than 60%, so it's like a benefit, it's like an opportunity for banks to take a major role of the value chain, okay? If we have more time, we can talk about, you know, the different strategy that the bank are taking, because there is some four models, very interesting, but if we have more time, we can get back later.
So you've just mentioned, obviously, some of the companies that are disrupting the market. And at this point, I'd like to hear actually from Oded a bit more about your company, which is how that's come into the area and what area it's disrupting.
Would be pleased to answer. Just a couple of things before that. None of us spoke about this panel before. So just to know, we've known, Dorel and I know each other, but we met on the stage and we all agree about this. So that says something. And I also, to your question, I want to ask, how many people in the room who are Israeli have heard of Paybox? Look at that. BitPay? PepperPay? I mean, that covers almost 100% of the audience. These are all examples of PSD2 and open banking implemented in Israel without those words and without a regulation requiring them to do that. What they are third parties or technologies developed by the banks themselves which enable consumers to make payments using the platforms of other banks. And to your question, I really like the Paybox example. Paybox is a startup which, you know, we as Visa were dealing with them. They were like a couple of young guys pitching us, really charming, kind of like, you know, trying to tackle the world and kind of almost charming how naive they were, right? But guess what? A few years later, they did it. They enable, you know, the three of us can go out to dinner together and make a group payment, or we can pay for our house co-op fees or whatever they are, pay each other as a group, or pay, you know, other consumers, either from card to card, or from the account to the card, from the card to the account. And Discount Bank felt that they needed to compete with Bank Hapoalim and Bank Leumi, who developed similar solutions on their own. So they bought the domestic license in Israel to this for this company's technology, and they took that cash infusion and they're using it to expand globally. And what it is a platform that enables consumers to pay each other. And just to your question about my company, it's actually not a startup, it's a fintech advisory. And what we specialize in is connecting banks with startups. So happy to help any of you.
That comes in nicely. And I guess as these two things have advanced, we've seen like the influence of RegTech. Which is actually kind of what it says on the tin, regulating the technology sector. So do you want to expand a bit on that, Dorel?
Yeah, I like those kind of buzzwords, RegTech, yeah. EdTech, RegTech, whatever tech.
Fintech,
yeah.
You know.
Paytech.
Children tech, that will be the next thing. Anyhow, there's something that is quite important. Every 15 seconds, guys, every 15 seconds, there is a new banking regulation somewhere all over the world, somewhere. Every 15 seconds. It's really unbelievable. And it
Is
means
that, is that real?
it's real. It's real. It's actually real. Yeah, and it's mind blowing. I mean, how can you actually cope with that, right? So that's why we are seeing finally, and this is the I think the maturity of the fintech sector, right? So when fintech just began, like I don't know, like 10 years ago, or 12 years ago, after the crisis, so we saw some companies in the payments, lending, credit risk analysis, those kind of investment trading, small business lending, and so on and so forth. This is the basic stuff, right? And finally, we are seeing fintech companies going into the basic of the essence of banks or insurance companies all over the world, which is how do you actually manage your credit risk analysis, how you manage your risks in all sorts of cases, and how do you actually comply with these amazing regulations, AML, KYC, GDPR, whatever buzzword alphabet soup you want to use. And finally, it's happening. I mean, finally, we are seeing some really good companies. Even in Israel, we have I think 12, 15 companies right now in the RegTech world right now. And it's growing. It's really growing all over the world because this is something that banks cannot invest within. They have to invest within. If a bank going into a crisis, maybe it will cut 50% of his digital banking budget, but he will never cut something from his regulation or whatever compliance budget. And that's why finally we are seeing some new companies coming with this kind of buzzwords, technologies, AI, deep learning, blah, 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 going into those kind of places and really assist financial institutions, all sorts of financial institutions, credit cards, and of course banks, investment houses, and insurance, really help them just to comply with these amazing regulations, helping them to streamline the onboarding process of customers, to have a continuous authentication of customers, continuous KYC of their customers, helping them with anomaly detection of all sorts of frauds, and so on and so forth. And I think it's really, really amazing to see that banks, maybe in some cases, it will take them ages to do something with fintech companies in other spaces, but when it comes to regulation, I think that banks are much more open for that, and we are seeing a lot of good examples all over the world of really big top-tier banks already working even with small fintech companies that can really save them a lot of money and time and process, or to avoid all kinds of penalty fees by doing it or working on those kind of regulations much more faster and better.
So
I want Ophir to come in and then we'll come back to you.
I think you cover the RegTech. Maybe you want to discuss a little bit about the robo-advisor, because I think...
Yeah, I think we can bring robo-advisors in there. If you want to explain what that is to the audience, that would be great.
Okay, so one of the questions in the panel was robo-advisor, and it's how it's combined, if it's the new fintech, I guess. So about robo-advisor, so it's part of the new fintech. But I think it's not something new. Okay, it's something that it's evolving. There is a couple of nice example about the size, how much actually assets is being managed under a robo-advisor, and we see in Accenture that by the year of 2020 it will be something like 10% of the asset will be managed under robo-advisor. In the end of the curve, we see that robo-advisor will be something free. People don't have to pay for that, and will be some ecosystem around that.
Okay, and if you want to come back in on that, Oded?
So an Israeli anecdote about robo-advisors and RegTech. I'm going to pull them together.
Bring it together.
So there were two entrepreneurs, Dudi Govrin and Dudi Sosna, a number of years ago, who changed what they do in life and decided to start a startup called Actimize. And Actimize provided compliance solutions to financial institutions. Fast forward to today, it is one of the leading global solutions for RegTech. They don't call it RegTech, but that is what it is. They sold it for an undisclosed amount, which was said to be $280 million to NICE Systems. And then the next thing they did was they started a company called Personetics, which is one of the most interesting, I think, robo-advisor type solutions out there. That word didn't exist when they started, right? They were talking about managing customer complaints, but it has evolved into a very cool user experience where if I access my mobile banking on my app, it might advise me that my electric bill went up this month and maybe I should get my filters cleaned. I mean, that's how sophisticated it is. And just one more thing about RegTech. In the many years that I was at Visa, we also had unpleasant discussions about risk management, right? you guys have too much fraud, too many chargebacks. We're going to put you in our risk program. You need to make some changes. Talking to card issuers. And one thing became very clear. If there is a good risk solution, the chief risk officer, he's going to find the budget. Oh, yeah. He's going to buy it. Because if one day they're going to have a problem, the board, not the CEO, the board is going to ask that guy, why didn't you buy that solution? You could have prevented this huge problem that we have now. I agree with Darrell. When you go to the head of digital banking or the guy who spends all day talking to startups, you know what? When there's an economic downturn or when for some reason the bank has a big write-off and budgets have to be slashed, innovation is one of the first things that goes. So while RegTech doesn't feel sexy and exciting, it is quite a safer field if you're smart enough and good enough technologically to provide real value to the CROs, because they work closely with the IT department and they're going to check to make sure that you really are improving their performance from a cyber perspective.
I just want to add something, thank you. I just want to add something about robo-advisory. So those kind of technology, hybrid technologies that allow, clients, private clients, retail clients, to much easier, trace their money, understand their investments, do it in a hybrid mode or self-service mode or whatever. We haven't seen till today any kind of really good technologies coming from globally, and I'm giving you a headline for that. Yeah. Because, and there's an Israeli bank trying to do something about that, but I think that till today, let's be honest, guys, nobody cares about banks. Maybe me, maybe you, but nobody really cares about banks. People just want things to get done, and people just want someone like a cool friend, real-time trusted advisor that will help them to just manage their life, their financial lives, help them to guard their money, to grow their money, and they don't really care about the friction and about the service or whatever. Until today, we haven't seen any kind of good technology, and I'm giving you a question maybe back to the audience, some kind of a good business model and a good technology that really looks on the customer's full, holistic financial life, everything, even his option, if he works in a startup, even his, his parents' will, or whatever, and looks on everything and really help him to better understand, first of all, just to better understand his financial wellness right now, what's happening right now with his money on a full holistic view. That's the first one. And maybe some aggregators or APIs or PSD2 or whatever will help with that. And the second thing is really to give some really good suggestions or advice on how to invest this money in all sorts of ways, stocks, bonds, mutual funds, ETFs, and so on, and maybe even buy a home or real estate or whatever. Until today, we are seeing the robo-advisory 1.0, which is only the early stage of some stuff that is doing only a basic advices and so on and so forth. And I think that will be an amazing quantum leap, I would say, in the fintech world once we will see something really trying to provide this holistic view.
I just want to also have room for the audience to questions, and I want to bring after the last point. Sorry, I'm going to have to cut you off on this one, which is actually just going to discuss, we've discussed where the elements are going at the moment in the areas of fintech and robotech and regtech and how interesting that is. And then we've also seen frictionless payments, which is kind of something of the future with Amazon opening the store where you can now walk in and walk out without actually ever seeing a cashier. So what I just want you to each say in about a sentence, one thing that's exciting you about the future of the industry, and then we're going to open it up to the audience. So we're going to start with the end, with Ophir.
So I think, as I said before, and for me, it's the new era of bank. Again, it won't be a revolution; it's going to be evolution. Because if you ask the UK person what you think about sharing his data, he said. Still, it's not that, and if you ask a U.S. citizen if you know what is open banking, he say he doesn't know, he never hear about it. So I think, in the end of the day, we need to listen to our clients and the population. But we will see in the future a very interesting combination and partnership between banks, other financial services, fintechs, creating a new open system. If you look today, I think in a year or two, we're going to see a big change in the way that the customer buying a mortgage. Because, everyone can now apply for a mortgage. You don't need your bank. You can have the data. I saw last time I've been in the UK, I saw a really nice concept. You can have a mortgage about 1 hour, and everything is digital, including the authentication. And so for us, open banking, big things, new ecosystem, new partnership, like that you mentioned before. This is what we see the new fintech era.
Oded, even?
Yeah. I'm really excited about the idea that my bank is going to become Amazon. And that is something I don't normally think about, but when I put everything together, what I am looking for, and probably my kids more than me want, is a complete shopping experience, not only easy and seamless and secure. Those are assumptions that, of course, is going to happen, but also really smart, personalized, and giving me offers that I wouldn't be able to find on my own. And so while we see Amazon entering banking, I think through these relationships with external fintechs using the data, banking is going to become Amazon.
I think that in the last 500 years, banks were really passive, and the pendulum is now shifting back to the banks. They are gaining much more power, and instead of customers needs to go into the bank's channels, call center branches, web applications or mobile application or whatever, and only then they can do something, and they're getting like a menu of services. I think that finally the power is coming back to the banks, and banks are becoming much more smart. And maybe the most important word I want you to remember from what I'm saying is proactive, is how banks or financial institutions are becoming proactive, because as a customer, I just don't care. I really don't care. I just want someone, as I said before, that will help me to better manage my financial life. And it can be Amazon or telco or retail or whatever. I just don't care. I just want like a AI, whatever you want to call it. I really don't care. Someone just will help me in a proactive way. As a customer, I don't want to do anything. I've already gave my permissions to the bank. He knows everything he needs to know about me. So it's only about how banks are getting the power back, building themselves with the right supportive infrastructure instead of spaghetti, moving to lasagna or ravioli infrastructure, plug and play, not plug and pray. It's much more easier, faster, flexible, nimble, agile. They have the right vision, they have the right strategy, the right people, and they are becoming much more proactive. That's the only way they will survive.
I want to add to that.
I really want to open up to the
okay,
audience.
all right.
But okay, yeah, you can add it.
I just want to say something. I agree with the real proactive, and another thing, we talk about the hyper-relevant. Relevant is not enough. You need to be very relevant for your customers. And for many years, because the customer was actually was prison in the bank, you can have a lot of offering that's not relevant for you. This episode, I think, was past. You need to be very, very relevant. And again, you need to have trust of a customer. And I think very interesting, you can get trust by digital concept. It's not have to be the human. You can have a lot of trust in the machine. And actually, on the 70s, one of the professors of MIT showed that human can trust machines like they trust the human and maybe more. So it's hyper-relevant and trust, this is the key.
So you have a panel that's super passionate. Do we have any questions that want to ask?
We've spoken a lot about the future with Amazon and Chase in the US, and we mentioned here Playbox for innovation within Israel. Given the regulations and the market size, how do you see fintech innovation happening within Israel, within Tel Aviv, for this market, other than the few small companies that you mentioned earlier?
I think that to speed up innovation, banks need to change a lot of their infrastructure and their architecture. That's the first key. And we are seeing finally banks, all the banks here in Israel, and even the insurance companies, right now doing a lot of digital transformation right now internally and changing the way they operate and opening themselves. And it's not just developers portal, per se, it's actually changing the way they are looking on their own business model and how they can really collaborate with fintech companies, not just for payments, but for much more relevant stuff. And I think it's a step. It's a evolution. It's not a revolution happening here in Israel, and it's happening, I think, by all sorts of places. It's coming from the innovation teams within the organizations. It's coming, like Oded said, and I totally agree. It comes from the CROs. A lot of CROs right now of the Israeli banks they're meeting with companies. They're looking for new technologies, new services. It's coming from marketing. It's coming from digital mortgages, it's coming from all sorts of places, and of course payments and all the other places. And I think it's a revolution happening, but a lot of that, again, needs to come from the infrastructure. If you really want to plug and play with companies, if you really want to build your own sandbox or whatever, you need to make sure that you have the supportive infrastructure for that, and it's finally happening. It took a lot of time. I'm saying it as an ex-banker. It took a lot of time for banks to understand that it's inevitable. They will have to change or to throw away those kind of spaghetti infrastructure and to change their operation model. And it's happening. So I'm very optimistic about that here in Israel.
You got about a minute, so be quick.
Yeah, so I have a bit of a global perspective because as Visa in Israel, we were dealing the innovation team with banks all over the world and also managing the core business with the banks here. And there is a tendency to be self-critical in Israel. And I would say that actually the banks here have done quite well in their level of digital transformation. First Leumi, then Hapoalim, and Discount Bank is doing a very nice job catching up. I agree there are significant challenges on two fronts. One, as a bank, I want to differentiate myself. I want my offering to be better than my competitor, and I'm not comfortable collaborating with a third party because then somebody else might collaborate with the same third party, and then I don't have my differentiation. That is the old way of thinking. It has changed, but it hasn't changed in everyone's minds yet. So that's a global issue. And the second global issue, I think, is what Darrell mentioned, which again, we're seeing change all over the world, and that is the banks have legacy IT infrastructures, which if you can think about a huge boat, right? So to move it, you got 5,000 people on the ship, and you better be careful when you start changing directions because there's a lot of people on board, right? And that's your money. What they need to do, and what they are doing now with these new systems, so you need to take that boat apart completely and rebuild it using pieces of Lego. And those Lego pieces can move around quickly, and they can plug into this startup and that startup, and they better have good glue holding it together because that boat needs to stay afloat and it's continuing to hold vast amounts of money. But until that change takes place, and these are massive, difficult infrastructural changes, banks are in the position of doing what we call putting lipstick on the pig, right? So we have to, we'll paint the outside of the boat, we'll make it look pretty, we might put good smell on it, we'll improve the customer experience, but it's not really making the difficult changes that are required to create a foundation for rapid innovation in the next decade.
Okay, we'll take one more question from...
Yes, hi there. So there seems to be a lot of excitement about banks with APIs, programmable banks, all that good stuff, Amazon. Do you consider this as mostly threat mitigation? And if so, is it going to be enough with the looming, decentralized banks over the horizon?
Well, I think it's both. I think it started as threat mitigation. It takes me back to the PSD2 story with Europe. So in Europe, the regulator was saying there isn't enough innovation, there isn't enough competition. By the way, very similar story in Israel with the Strum Committee and all kinds of changes that they're requiring the banks to experience. And the banks felt threatened because they used to be a fortress and now their walls are being ripped down. So, of course, it's defensive and it's threat mitigation. But the smart ones, like Nordea Bank that I mentioned earlier, I think Leumi, we could make a good case. Now also Hapoalim in Israel, and Discount is getting there, are looking at it as an opportunity. So if they're forcing me to take down the walls around my fortress, how can that help me? Well, it can help me maybe by making it easier to reach outside the fortress and grab somebody else's customers. Maybe it means I could develop new ways of doing business. Maybe I can, we talked about payments in Amazon, maybe I can access customers that aren't using electronic payments at all. They're using cash. Maybe I can give loans to small businesses that I formerly viewed as too risky, but today using all kinds of logarithms, scanning social media and creating smart credit decisions, I can give loans and earn credit, interest-free income from sources that I never had before. So I think it's an evolution, but we are definitely now looking more on the business development front than the threat mitigation side.
I think it's very difficult to be banks in those days. It's very difficult. Because in one hand, you need to take care about the branches, make sure that you have the employee, know to sell, know to service. And on the other end, you need to develop a new front end, new services. I think that Ronald Reagan said, if you're not choose, someone else will choose for you. And I think this is the era. bank need to choose very quickly their play. Which play they're going to act. Which play they're going to take in the new ecosystem. And if they are not going to choose, they're going to be what we call a utility player. So it's be a bank that actually produced, will be cost efficient, produced very, very traditional. But if you want to be a digital relationship manager bank, or even what you call living services, it's a even more visionary concept. You need to know where you need to put your money. It's very complicated. And not everyone can be a bank that is a digital relationship manager. So what are you going to see in the future? That you're going to see different type of artifact, different type of banks. Every bank taking different position, and some bank that cannot take the decision now, they will become a utility or maybe will become an open platform. So it will be very, very, very exciting to see the future of the banking in the 3 or 5 years.
Yeah, sure, go for it.
Why not? An anecdotal
Just
comment
delaying the coffee.
about how difficult it is to be a bank. So when you sit down with the CFOs, the heads of strategy, all these senior executives who are trying to figure out what to do, and start out with the small talk, asking, how's it going? The one that the answer I remember the most, which I think is representative of all the rest, Oded, you realize we're undergoing open heart surgery right now, don't you? Right? And that the open heart surgery is initiated by regulation, be it PSD2, be it the Shroom Committee in Israel, it doesn't matter. And at the same time, we're trying to innovate. And I think that's a fair description. And that's where the startups come in, because they can help.
I want to thank the panel because I thought they were great, personally, and enjoy the coffee break, I think, which is coming up next.
Thank you. Thank you, everybody.